That's right. We have that deficit of more than 11 trillion naira. And out of that, 7.04 trillion naira is supposed to come from domestic borrowing. That means that we must have a strong capital market. That's why we have the investment security bill, and is intended to make the capital market stronger. So we have the chairman of the House Committee on Capital Markets joining us now from our Abuja studio. That's Honorable Babangida Ibrahim joining us there. Good morning, Honorable Ibrahim. Thank you so much for your time.
Good morning.
So I must say, is it congratulations that we now have at least a working document for 2023. Now to make it work is what we're looking for. And thank God we have this bill that's supposed to strengthen the capital market, because if the federal government is turning to the capital market for more than 7 trillion naira, which is major out of the 11 trillion naira deficit, then of course the capital market has to be strong enough to accommodate that.
It is.
Can you hear me, Honorable Ibrahim?
Yeah, I can hear you now.
Okay, all right. I was asking.
The line went up. Yeah, I can hear you.
Okay, I was asking of how we can make the capital market strong enough to be able to accommodate this expectation from the federal government to get more than 7 trillion naira this year to fund the budget through domestic borrowings.
You see, that is the more reason why we sponsor a bill to refill the existing acts, the Investment and Security Act 2007. If you remember, this act was passed during President Umar Musa Yar'Adua in 2007. And you see, immediately after the passage of the act, there was a global financial crisis. And after the global financial crisis, it was obvious that there's a gap in the regulation of the capital market all over. For that reason, this existing act has to be refilled. One of the major reasons why we refill the act is to provide a stronger regulatory power to Security and Exchange Commission, to the extent that when you give them more power, at least, number one, they can perform an effective oversight in public quoted companies. And number two, it will also allow it to strengthen its tentacles, especially with regard to most of the new developments in the capital market. For example, you see, if you notice that the commodity ecosystem was not regulated before now, so there's commodity exchanges operating now, which they need to be regulated. There are also new schemes that are coming up, which were not there during the passage of the initial act, like the regulation of Ponzi schemes, the regulation of derivatives, and a lot of other new development in the capital market. So this is the essence why we need to repeal this act to strengthen the power of the SEC in order to perform effectively. At the same time, to also build investors' confidence to the extent that a lot of people will come to the market and invest, and it will make the market stronger to be able to provide all the needed funds.
So what new is this ISA bill? What's it bringing? Because it's repealing an existing one. So what new is it bringing on board?
You see, like I said earlier, you see, when you remember what the Minister of Finance was saying about funding by the budget deficit through debts, you see, you realize that one of the areas why we emphasize is the issue of borrowing by subnationals, like the federal government, state governments, and the local government can now go to access the capital market easily and raise money there. Like I said earlier also, on the issue of strengthening the power of the SEC, that's why it is now an affairs regulatory body of the capital market. At the same time, you see, the Act also provide for the commodity exchanges The appropriate pricing and trading of commodities in Nigeria will also assist. If you remember, when the capital market was initially established, we only have Nigerian Stock Exchange. And that stock exchange was only trading in equities. But now the market is beyond trading on equities. It also includes the trading of the sourcing of debts and also management of funds. So there are a lot of products that have been traded in the exchanges now. And we have about 4 to 5 exchanges now. And with the commodity exchanges, I believe a lot of exchanges will come in the pipeline.
So we do have, the year started for us here on Business Morning with the conversation on the finance bill, which of course is guiding the implementation of the 2023 budget. And even the Minister of Finance did refer to it when you talk about the revenue that the government is expecting through taxes. This, a lot of people think, is becoming a burden to investors. So in the face of this, how do you hope to boost investment into the capital market when it seems like investors are being discouraged because we have new taxes being added to the burden they're already bearing?
You see, when you look at taxes are mostly on profits. So it doesn't discourage investors. You see, when taxes are, because the only aspect of the finance bill that cover the capital market is the issue of capital gain on shares. A lot of people have raised concern that this will discourage investments, but I don't think so, because you see, the capital gain on shares is on profits, and everybody goes into business to make profits. And you see, this is a sign that you can only pay the capital tax if there is appreciation of the prices of your shares. So it's a good omen, and it will attract a lot of investments into the Nigerian capital market. It is better to even slightly charge the capital market, the capital gain on shares, because the capital gain on shares is being treated just like the capital gain on any other assets. So the shares are now assumed to be asset like the physical asset. Why, when you dispose an asset and there's a margin on it, you pay capital gain tax. So I don't think the introduction of capital tax on shares will discourage investors. Rather, it will encourage investors, because which means there are a lot of available profits, or there are transactions in the capital market that can lead to share appreciation. So I believe that since it is introduced now, let us give it a trial and see what is going to be the response of the market, because it's a policy of government.
All right, and then another thing is we've been having this conversation since last year to see how we can expand, the capital markets, for instance, the equities. How do we get more listings? Today in the equities market, if you have some major stocks you see the market deep in the red. You have 1 or 2 major stocks. So what are you doing, or what do you intend to do to attract more listing into the market? Because this is, of course, another way to boost the market to be able to handle what the federal government is expecting it to do.
You see, that is the essence of repealing the act. Number one, to provide transparency in the processes in the capital market. You see, companies will be listed in the capital market if there is assurance, there is a confidence that their investment is safe. And so for that reason, we encourage, or the existing acts will now develop a kind of investors' confidence, so that most of the gaps or areas where there are violations are discouraged. That is why in the existing acts, we have provided for a lot of penalties and measures that are deterrent, that will discourage some of manipulations that are currently existing in the market. So it is the performance of the market, how transparent the market is, how honest and sincere the operators are, will encourage the listing in the capital market. So we believe at the end of the day, if the Senate concur on this bill, a lot of things will happen, and it will encourage investments, and a lot of companies will be listed into the capital market. That is why one of the areas we strengthen is the regulatory oversight function of SEC over the quoted companies. Because once the shareholders of quoted companies are confident and they have appropriate returns, I believe most of the companies will be listed in the capital market.
Yeah,
especially
yeah, just before we let you go, because we're almost out of time, we do know in Nigeria we have a lot of policies, we have a lot of bills, you know, but eventually it seems it only ends on paper. As the chairman of this committee, what regulatory framework do you have to ensure that this bill will come into operation and will really make an impact in the capital markets?
Well, the bill has already been passed in the House, and it will be sent to Senate for concurrence. And I can assure you that we are targeting before the end of January, the Senate will concur on this bill. And once it is concur on the bill, automatically it only remains the endorsement of Mr. President, and the bill will come into effect. So I believe that it all depends on the presidency, and we're appealing to them that once the bill is concurred by the Senate, they should expedite action on the bill so that at least it will take effect immediately within the first quarter of 2023.
All right, Chairman of the House Committee on Capital Markets and Institutions, Honorable Babangida Ibrahim, thank you so much for your time this morning. We're looking forward to the assent of the President and then the operational of this very bill.
By the grace of God, thank you very much.